Over the weekend at the Berkshire Hathaway annual meeting, Warren Buffett weighed in on fiscal policy.
If we send in a check like we did last year, we send in over $5 billion to the U.S. federal government. And if 800 other companies had done the same thing, no other person in the United States would have had to pay a dime of federal taxes, whether income taxes. No Social Security taxes, no estate taxes, no. It's open down the line. Now, I would like to. I hope things develop well enough with Berkshire that we say we're in the 800 club and maybe even move up a few notches. It doesn't bother me in the least to write that check, and I would really hope with all that America's done for all of you, it shouldn't bother you that we do it. And if I'm doing it at 21% this year and we're doing it at a higher percentage later on, I don't think you'll actually mind the fact that we sold a little Apple this year.
All right, joining us right now to talk about this is Wolfe Research head of policy and politics, Tobin Marcus. Tobin, I just want to tell you what he said actually just before that, because I think this is pretty key to some of his thinking along these lines. He said, I would say with the president's fiscal policies, I think that something has to give, and I think that higher taxes are quite likely. And the government wants to take a greater share of your income, or mine or Berkshire's, they can do it. I think that's kind of what this gets down to. When you look around in Washington, where are we headed? What's tax policy going to look like?
Yeah, so eventually, I think it is clearly true that we're going to need taxes to go up as a share of GDP. You know, we're looking at large structural deficits, even in a full employment economy, which is very rare. I think the sort of mismatch between the deficits that we're running and the state of the economy is the most concerning thing about the fiscal situation. And there's no sign of improvement in the kind of official forecasts. But the next changes in tax policy are going to be to extend tax cuts. I mean, the big debate next year is going to be Trump and Republicans wanting to extend the full $4 trillion worth of expiring tax cuts from Trump's 2017 package. Biden only, quote unquote, only wanting to extend about $2 trillion worth of that. So one way or another, I think that we're looking at widening the deficit rather than narrowing it relative to current forecasts. And I think it's, quite a ways farther off before we get meaningful fiscal consolidation.
Yeah, the spending plans that are already in place, I mean, you can look at that as kind of upstream swimming for Powell and the Federal Reserve as well. It's, whatever Powell's going to do, he has to look at what's happening on the fiscal side of things and realize, those are the tides that are coming, and figure out how to navigate, right?
Yeah, I think that's right. Although when you look at the medium term, kind of fiscal projections, it is, I think we're mostly in a regime where the cost we're facing is opportunity cost rather than, sort of the risk of crisis, the risk of some out of control spiral in interest expense that would push us into a kind of a fiscal dominance paradigm where the Fed needs to make its decisions based on debt sustainability. And I think if you look at, CBO has done good modeling on what happens if interest rates are, a point higher over the long term? What happens if, even if inflation is higher over the medium term? And it doesn't really push us into that kind of spiral. It's, this is a situation where paying more in interest expense means that we have to make even harder decisions at the margin about things like defense spending, things like the sort of continued trajectory of Medicare and Social Security spending. So I think it's those trade-offs that are the really kind of hard question at this point. If you play it out far enough into the future, then eventually you're looking at those kinds of out of control spiraling dynamics. But I don't think that we're really in that scenario yet. I think Powell is still making his best judgment.
How do we know? I mean, that's a pretty tricky question. I don't know anybody who can actually say this is the point that we're going to spiral in that direction. I think the people who watch the markets most closely, they don't have any idea what the number is that is suddenly like, okay, this is what's going to cause the bond market to sit up and say no more, bond investors or the countries that have been buying Treasury bills. I mean, it seems like it's a great unknown.
Yeah, I mean, I think that's when it comes to the risks of something like the 2022 sort of bond market strike against the UK, I think that's totally right. There's a line somewhere. You don't know in advance where the line is. My my thinking is that we're still a ways away from that, just based on the continued unique status that the U.S. has, the fact that other developed economies are also running kind of comparably high debt burdens, so there's not a lot of alternatives. But I think that's the risk. Like, if you're thinking about a crisis, the risk is that you get a sort of sudden loss of bond market confidence, rather than just doing the projection of what we're already scheduled to pay. Like, that doesn't take us to a crisis point anytime soon. But you're totally right. The farther we go without kind of any move towards fiscal consolidation, and I think we have a ways farther to go based on how things are going in Washington, that risk, even though I still think it's low, does get higher and higher.
What are the things we should be watching in Washington? Is it anything ahead of the election, or is it everybody has to wait to see what happens with the election and then what will happen to tax policy beyond?
Yeah, I mean, primarily the latter. I think tax policy is the sort of the highest stakes thing that is going to come through Congress next year, because this huge tranche of tax cuts is scheduled to expire, has to be dealt with one way or another, and the parties want to extend at least some large portion of the tax cuts regardless. So I think that comes down pretty directly to the outcome of the election. If we have divided government of any kind, I think we're getting at least some expiration of the tax cuts at the high end. In a Republican trifecta, I think we're probably getting them extended wholesale. And then the details will be a big debate, I think, all through next year about how it's being paid for at the margin, what kinds of offsets get thrown in. I think that creates some policy risks on things like IRA repeal or partial IRA repeal in a Republican trifecta. Sort of anywhere that you can scrounge up money to help offset those costs, I think, is going to be in the discussion next year.